Just type yes so that we can start. Okay. Yeah, just mute your microphones. Just mute your microphones. Okay. Just use the keyboard. Just use the keyboard when you want to respond. We don't have enough time. Plus, the network is not stable this side. So if you can hear me, just respond. Just respond. Okay. Can you guys see my red circle? Can you see my red circle? If you can see my red circle, just type yes. If you can hear my red circle, just type yes. Just type yes. And let no one draw in the screen. Let no one touch the screen. Just watch and keep on responding. Don't do anything. So if you can hear my my red circle, if you can hear my this red face, they just respond. Okay. So let's just begin, because we don't have enough time. Yes, let us just make sure that we mute our microphones and everything. We're just gonna use the keyboard to respond. So if you can hear my voice and you can see my red face there, just type yes. Just type yes. If you can see my red face, just type yes. And it's like people are not responding. Those who just came in, can you hear my voice and can you see the red face in the screen? Okay, yes. Okay, so let us just continue. Let us just continue. Clear it down. Let us just continue. Okay. So okay. What we are going to touch today, I'm just going to discuss freely without maybe sticking to any topic, but a topic will just come as I am illustrating. The topic will just come. I just want to make it like as a free webinar. So as usual, let's say the market is doing like this and it reaches this level. What is in your mind when the market reaches this level? Let's say it is moving like this. What's in your mind when the market reaches this level here? Okay, someone is saying we buy. What are others saying when the market reaches this level here? What is in your mind? Let others respond. What is in your mind when the market reaches this level? Look for buy setups. Okay. So I hope we all understand that the theory that we have learned, that from the resistance level we sell, and from the support level we buy, just as you guys are responding. But let me just give you this information. For free. Yet it is for those who are taking my course, but I will just give you for free. So what you need to understand, guys, is that even in a ranging market, like if the market is ranging, it is not that the market is both for buyers and sellers. It is not that way, yet it looks like that you can sell here and you can buy here. Yet if you can look deep into details, it can even in a ranging market, there is a side which is promising, there is a side which can show strength, there is a side which can prove or which can tell you where the breakout can happen. Yeah, so I will just continue like where we ended last time, to the webinar that we had last time. So let me just show you. So as we all know that the most dangerous thing to avoid in a ranging market, it is a breakout. The most dangerous thing that we should avoid, it is a breakout. So what you need to know is that before you trade a ranging market, you should study correctly your waves. I hope those who were here last time will understand what I'm talking about. You should study correctly your wave. I will just remind you guys, because this is a very important information. You should study what is happening in your wave, so that you will know which side to go with, which side to support. You see, let's say here, there is a red candle, and there is another red candle, and there is another red candle here. Then we go to green candles. There are green candles, green candles, green candles, green candles, green candles, and then let's go to red ones again, and there is a big red candle and another red candle here, and again there are green candles pushing the price up. I hope you can all see green candles pushing the price up, green candles pushing the price up, and there is a red candle, there is another red candle, you see, and the price is now here. There is a small red candle here. So as we can see, guys, that this is a ranging market, but the setup of the candles is not the same. So let me know if you understood what we talked about last time. So which side here is the strong side? Which side is the strong side here between the buyers and the sellers? Which side is the strong side? Let us quickly respond. Which side is the strong side, or which side can you choose to go with? Sellers. Okay. Sellers. Okay. Sellers. Okay. That's wonderful. So I hope I'm happy that last time we understood what to talk about. So here, the strongest side, it is the seller side. So you because you know this information, a lot of people will be a lot of people will be taking their trades here. They will be buying here. But you, because you know this information, the only trades that you'll be taking, it will be trades which are around this region, because you know which is the strongest region. It is the side of the sellers, or it is the resistance, the strongest or the most advantageous position. It is the sell position. So because you know that information, a lot of people will be pressing their buys, but you will only be taking sells in this range. There is no need for you to buy, because you can see the strength and the momentum that it is favoring the sellers. So even when a breakout will obviously happen on the downside. Price will break out and go on the downside. Why? Because the sellers have been showing us signs of strength. It is not usual that the price can break and go upwards. The price will break and go downwards because of the strength that we've been seeing in the range. I hope it is clear. So this is how you should approach a range. This is how you should approach a ranging market. Like, you do not just take any side, but you look at which side is promising, which side is showing signs of strength, signs of momentum. So then you will not be buying and selling a range, but you'll only be taking one direction, so that you can even profit from the breakout. So that you can profit from the breakout. So okay, let me make another illustration. Let's say the market is going down, the market is going down, the market is going down, and now the market is beginning to be in a range. It is beginning to be in a range. Okay, so let us not consider the waves and the candles and everything. Let us just consider the structure. So where is a breakout likely to happen? This is my question. Don't consider like candles or the way the waves are formed. Just consider like the structure of the price, that the price was moving down and now it is moving sideways. So where is the breakout likely to happen? Where is the breakout likely to happen? Is it going to be a breakout that is going up, or it is gonna be a breakout that is going down? Without considering candles or strength. Okay, someone is saying downwards. Okay, yeah, where is the breakout likely to happen? It is going down. Okay, so okay, what we need to understand, okay, I like the fact that you guys answered. I like the fact that you responded quickly. But what we need to consider is that before the sellers were showing strength. We all understand the sellers were showing strength, were pushing the price down. So if the sellers were pushing the price down, for the fact that the market entered in a range, it means that now the sellers are becoming weak. The sellers are becoming weak because they've been strong. So if now the price is on a range, it means that they are now weak, and it means that the buyers are now getting strong. The buyers are now getting strong because they are now fighting, blocking the sellers. So if now the buyers are gaining strength, are blocking this, blocking the sellers, it means that a breakout which is likely to happen, before we consider the strength or the momentum, another thing to predict a breakout, it is that a breakout, it is likely to happen on the up direction, because the sellers have been strong before and now they are failing to be strong. The buyers are now coming in, so which means it is likely that the buyers, they push the price up. I hope you understand. It is likely that the buyers will push the price up because now the strength of the sellers have decreased. Now the market is moving direct. And another thing, why am I saying this? I am saying this because in forex trading, more especially in currencies, the price is trying by all means to maintain an equilibrium level, because if the price is going to go down like forever, some economy in other countries may collapse, you see. And if the price is trying to go up, it can even affect the economy. So what is happening in currencies is that the price is moving in a up and down direction, trying to maintain okay, let me just clear my screen. It is moving in an up and down direction, trying to maintain an equilibrium state, an equilibrium value, you see. So in forex, it is not likely that the price can go up like forever. So some economy can be affected. So that's why I'm saying if price was moving down and it is now showing signs of ranging, it is likely that the sellers are now weak and the buyers are going to take over. And even if the previous trend was upwards and now it is beginning to range, it is likely that sellers are now going to take over, you see, trying to maintain the equilibrium state. We all know that the market move in support and resistance in most of the time. So I hope that is clear. Do we understand? Do we understand? And that's where we even come up with patterns like head and shoulders, like double tops and double bottoms, for the fact that the market is trying to maintain an equilibrium state, so that uh, the economy is not affected, you see. So if the market was trending upwards and now it is entering in a range, it is likely that it will collapse downwards. And what should tell you, you should then consider the strength or the momentum to confirm that. You should study. Okay, the voice is low, I can't hear. But others are hearing. Okay, I will try to speak loud, but there is nothing I can do. There is nothing I can do here. Let me check audio settings. I hope now it is loud and clear. I hope it is clear now. Yes, thank you. Okay, I hope it is clear. Yeah, so this is what happens when the market has been trending upwards and then it enters in a ranging mode. It is likely that it can go down. Not that all of the time it will go down, but chances are that the price is going to go down. That's why it is very profitable when you trade support and resistance, because in forex trading the market is trying to maintain an equilibrium state. When it goes up, it will go down again, and goes up and goes down, just like that, you see. So what let me make an example. What looks like a trend in 1 hour, what looks like a trend in 1 hour, in the daily time frame, it is only a pullback, or just a wave. What can look like a downtrend in the 1 hour, in the daily time frame, it can look just like a pullback, just like this, just something like a pullback, you see. So that's what we should consider again, that when we see a downtrend in the 1 hour, we should know that in the daily or in the weekly, it is only just a small pullback. So if it is a small pullback, the price is going to go the other direction. I hope it is clear that way. What looks like a trend in 1 hour, or in 4 hour, or in 30 minutes, in the higher time frames, it looks like a small pullback. Does that the price is going down and it will go up again. But in the lower time frame, we see like a big downtrend, yet in the higher time frame, it is just a pullback. So I hope you understand. I hope we get it. I hope we get it. So okay. Okay, what are your questions? What are your questions? Because I just wanted to clarify these things of range trading, because even today we have few people, so people are not here. So what are your questions, guys? If you have any question, just type it so that I can answer it quickly. Do you have any questions? If you have any question, let us just answer that question so that we can continue. Any question? Okay, it seems like people don't have questions. And they are not answering. Okay, let me check here. Which strategy? Okay, I never saw this one coming. Hey, okay, someone is saying, so when this is ranging, We then look for the market patterns. Okay, which strategy you use? Okay, sensor. Okay, sensor. When the market is ranging, we should look for patterns. Okay, when the market is ranging, uh, okay, yeah, patterns do count. But for the information that I've given you, when the market is it is like ranging, firstly you should consider the momentum. Let me just type quick. You should consider the momentum. Ooh, I'm sorry for this. You should consider the momentum or the strength. You should consider the momentum or the strength. When I'm talking about this, I mean the formation of the candles. Like how big are the candles and how aggressive are the candles. Like as I've illustrated, how big and how aggressive and how strong are the candles in the waves, in between the waves. So that's what you should look at in between the waves. What is the strength? What is the momentum in between the waves, so that you can know which side to go with. And another thing, what you should consider, you should consider the pre-trend. As I've said, you should consider the pre-trend. That before, was the market moving in an uptrend, or was it moving in a downtrend before it entered the range? You see, just as I've said, that if the market has entered the range in an uptrend, it is likely that your buyers here are going to be strong, because they are the one who have just came in this spot here. So it is like that. Even when a breakout happens, it happens on the downside. I mean, your sellers will be strong because it is them that disturbed your buyers. Here. So it is likely that they will be strong and they will push the price down. You see. And another thing that I didn't mention. Okay, let me just erase this. Okay, and another thing that I didn't mention, it is checking how did the market enter the range. How did it enter the range? Like, did it enter the range with the same strength, or let's say the market was moving in a downtrend and then it began to enter in a ranging mode? Did it enter the range with the sellers still strong, or the sellers were already becoming weak? And this is going to tell you how long is the range going to take. Let's say the range, or the market entered the ranging mode while your sellers were still strong, their momentum and strength were still high. So if the sellers were still strong, the range will take a long time. It will take a long time. The market will continue to range because your sellers were still strong and your buyers now are getting in to defend. So it will take a long time for the decision to be taken, so that the market will break out in either side or in any side. So let's say if the sellers were now weak as the market entered the range, the range will last for a short period of time. And the buyers will push the price up, you see. But then if it entered and the sellers were strong, the range is likely that it will take a long period of time. I hope we understand. As for which strategy I use, yeah, it depends what I'm trading. When the strategy that I use when I trade currencies, it is different from a strategy I use when I trade indices. But basically, what I trade, it is the information that I give you. So I use the same information. Yeah, even last time I shared strategies. I shared two strategies that I used to use, and they are very profitable, and I hope people are benefiting from it. I hope you understand. I hope you understand before we close. I just wanted to make this a very, very short session. So I hope it is clear. I can close. I hope I can close. It's clear. Okay. Okay, thanks. Which time frame is the best? Okay, as for time frame, like, okay, me, I use 1 hour down to 50 to 5 minute time frame. I use 1 hour down to 5 minute time frame because I no longer have enough time, like, to sit and monitor trades and allow trades to run for a long period of time. Like, when I open a trade now, I just want to make sure that in the next 3 or 4 hours I've closed that trade. It doesn't stress me for the entire day or for the entire week, you see. So if you want to hold trades for a long period of time, you can use the 4 hour time frame, daily time frame. But if you just want to take profits today, I advise you to use 1 hour downwards. 1 hour downwards. So I hope it is clear. I hope it is clear. So I think I will announce another broadcast, another webinar in time. I think I will announce another webinar in time. So okay, guys, thank you for attending. Thank you for attending. And okay, do you know how high of the day and low of the day work? Okay, highs of the day and lows of the day, it's basically, if you can just summarize it, it basically support and resistance. That is what other people are using. Like, they check the high of the day, like, if the price reaches the yesterday's high, I will sell. You see, if it reaches yesterday's low, I will buy. It's basically support and resistance. But I think we'll discuss it in the next webinar. But it's basically support and resistance. That when the price reach the high of the day, it will sell, and when it reaches the low of the previous day, it will buy. So I believe we'll discuss it in the next webinar. So thank you guys for attending. Thank you for attending. And I believe that even next time we'll attend and we will be blessed as I'm giving you this information. So we will chat and we'll discuss more in the Telegram group. So thank you.